When it comes to trading support and resistance, I want to first show you how you can actually identify support and resistance zones. Whenever you're looking for a support and resistance zone when you're not using an indicator, such as volume profile, you need to see at least 2 points to draw the support. When we're looking at this specific example here, we've got our first point right here, and then we've got our second point over here. Now, what you'll see a lot of people do is they'll just use a horizontal line at the very low and say, yes, that's where the support is. But that's not really a true representation of where the support is. Because remember, what support is telling us is that there's a specific price level at which there is a high demand for an asset. That's not one exact price, but it could be in a zone as we see here. So what we do is we extend that to the right. You can actually extend that as far right as you like. It just depends on how clean you want your charts to look. In this case, we haven't actually seen any price data down there, so there's no point in putting it further than these 3 points. So that's how we would draw a support zone. The same goes for when we are drawing our resistance. Now let's look for a resistance zone. Here's a good example of a resistance zone. This is actually back in December 2021 when the NASDAQ made a high before dropping over 35%. So we've got our first point over here. And then we can see that once price attempts to break through at this point here, we see it attempts to break through, but we get a very, very strong reversal candle here in the form of a red bullish engulfer. But this is a very, very powerful candlestick. Very difficult for bulls to break back up above this type of candlestick. But what we'll do here is we'll draw our resistance at connecting these points like so, right? So we'll make this red. It's not exactly important where you connect it, where you draw it from, as long as you're incorporating the actual high of the move with the resistance. And you know that every time that price is moving into this box, there's going to be additional selling pressure. So it's telling us again, traders are looking to get out of their positions in a move like this. It's a key aspect to look at when you're looking for resistance zones is you want to see a uptrend prior, okay? And that's what we have over here. We can clearly see that we've had an uptrend before. If we zoom out, we've had an extremely long uptrend. So that's the first thing that you look at when you're drawing resistance zones. And the same thing goes for when you're drawing support zones. Support zones, price moves into the support zone from above it. Okay, then it starts gathering support, demand for the asset picks up, and then the trend is either going to reverse or it's going to break through that support. Moving on to how we can actually take advantage of these zones. This is how we would do it. Once we've connected our support zone, which you've got here, we've got the third and final test of this support zone. And what we would be looking for is 2 things. The first thing is we can either look for a reversal in the form of a candlestick. And you can see here, we've got a bullish engulfer, and we would take our long trade over there. So we take a long trade there and we place our stop loss below the low of the support zone. Targets can be set because generally when a support zone forms, we're going to see a small resistance to the top side. And you can see here, there's a small resistance zone here, not perfectly defined, but this is essentially the high once the 2 troughs were made, connecting, or the 3 troughs connected here with the support. So the first target would be, at this point, would be around the high of the resistance. Remember, when you're setting your targets like this in support and resistance trading, try not to go for the absolute high because you're most likely going to miss it. People are going to try and front run this trade, so you can even go for something like this. You go for a target that's quite a way below the actual resistance. And then what you'll notice a lot of the time is you'll see that price actually breaks through that resistance zone, comes back down, tests that resistance, and then it turns into support, as you can see at these 2 zones here. This can be another entry for a long trade that we can take. What some traders would do, and this is high risk, is once you've got 2 points connected for the support, you'd simply place a buy limit just at the support zone. So we wouldn't even be looking for a reversal. We'd just place our buy limit, accept our risk, and place our stop loss just below the low again. So the same goes for the resistance. Once the price moves into the resistance zone and we've got at least 2 points, what we can do is begin initiating sell positions or sell orders into that resistance.